It is Wednesday, March 23rd, and we got to make it a little bit short this morning, guys. We are doing simpler stream week, which check this out here real quick. Let me see. Today we are going to be streaming the day trading room. So if you guys go to the simpler YouTubes here, I think on Monday we streamed the options room. So if you guys want to go watch my session, we did a few trades in there. I think we streamed the options room yesterday. And then today you got the day trading room. So I'll put this link here in the chat, guys. But pretty cool stuff. Little sneak peek into the world over there. All right, but I'll put that link in the chat, guys. And then I am going to put in here a few good-looking setups, which we shall cover here. All right, a few setups there for you guys. But quick look at the futures. The S&P is stretched as all hell here. The S&P is down about 0.5%. The QQQ futures are down about 0.8. The Russell 2000 down about 0.5, and the Dow Jones is down about 0.5. So I mean, at this point, guys, right? Brutal short squeeze. And we don't have the volume up here. It's a low volume vertical 1, 2, 3, 4, like 5-day straight shot. So it's a pretty nasty short squeeze. I think at some point here we got to get a decent dip. When we get a dip, then we make our next round of decisions. Not the spot where I think you want to get long. So if you look at Amazon, for example, maybe if Amazon can pull back, find some support, and then we take it from there. But in terms of chasing this market, be a little bit careful. Amazon is trading 10% above the daily 21 EMA. Right? So getting long here, it's no different than getting short down here. Typically not the best trade. So Amazon's 10% above the 21. Tesla is 15% above the 21 EMA, making a straight shot towards 1,000. And then your indexes here of the SPX is like 3.5%, 4% above the 21. So even if you're bullish on this market, this is a tough spot to jump in here and buy a bunch of calls. Even if you're bearish on the market, we don't want to be shorting down there. So I think in terms of the indexes, right, and the names that move with the indexes, so the Amazons, the Apples, the Teslas, the Microsofts, the Googles, the Nvidias, we need a dip here. Then I think we make our next round of decisions. One chart I do want to show you, which we look at this all the time, but I still think super, super important, is the weekly chart. And what I'm trying to get a sense of here is, do we go into the weekend above or below the 21 EMA? If we can close this weekend, and you got your S&Ps, you got your QQQ, your small caps, Amazons, they're back above the weekly 21. At least in the short term, probably makes the short side a little bit difficult. I don't think it sends us back to an all-time high, but that's a pretty good shift to structure. If anything, your market holds up a little bit better. Now, if we finish the week and we fail here and we're back under the 21, I think you got to work with the mindset. This downtrend could easily continue. So this could be very similar to the pop you had back there. You failed once, you failed twice, then you put in the new low. So that's pretty much the big question. Is this bounce that we're seeing your bear market bounce? So that would be very similar to, we'll change it up and look at the Qs. That would be very similar to all these pullbacks you have. You're in a bullish trend, you get overbought, everybody gets trapped long, and you get that 3 to 4 week flush, which in the short term feels really bearish, right? Everyone's kind of freaking out. But all you get is a flush to the weekly 21. You hold, you continue the trend. Everybody gets trapped long, they flush the market, it feels very bearish, but you hold the 21. Trend continues. From a bigger picture perspective, that's what an uptrend looks like. We rally off the 21, we pull back to it. The key is if you hold support there, you look for the trend to continue higher. Now that we're under the weekly 21, we're going to work with a similar mindset. If the Qs get that flush, this goes for everything. Amazon, the Qs. we get the flush, everybody gets trapped short, we get the rally to the 21. That 2 to 3 to 4 week period certainly feels very bullish. Things are up 2 to 3% every day. There's shifts of momentum on your 5-minute chart, your daily chart, but it takes you to the 21. You fail, trend continues lower. So once again, we've trapped the shorts. We've squeezed the crap out of them. But if you fail here, you could roll right back over. So whether it's the QQQ, whether it's the S&Ps, which are currently trading, pretty much at the weekly 21, whether it's your small caps, which they're coming up on key resistance, getting a little bit tired, or it could be Amazon. From a bigger picture perspective, in a swing trade perspective, the path of least resistance typically continues to be to the downside if you're under the weekly 21. The upside gets a lot more easy above the 21. So those are the two thoughts I'm trying to hold right now. In the short term, meaning today, this week, tomorrow, it's all a little bit extended. Anytime you're trading 3 to 4% above, not only your daily 21, but your intraday, like hourly chart moving averages, it's just not the time to get long. So here's what I'm looking for. If we can get that next flush, let's just dial into the daily 21. We get the next flush, it holds support, then that next rip takes you back through the weekly 21. I think we got something to play here. But if we fail, we're back under the weekly 21, and then the next bounce fails to take you back above it. I think we're going to roll right back over. Right? So in the short term, before I even think about buying calls, I got to get a dip. Then it's a matter whether or not that dip finds support, and then we take it from there. But keep that in the back pocket. Under the weekly 21, there's still the chance here that this bounce is just like that. You got the market makers playing both sides of the party here. Rope everybody in short, crush them, and then at the other end of the party here, everybody's getting bullish. Everybody's buying calls, then they crush them. So big levels there, guys. And until we have a bit more clarity, and I wrote an email to one of the members this morning, while we're waiting for some clarity here from the indexes, from the Googles, the Microsofts, go back to the basics. And for me, the basics is just that good setup. So a trade that we did in the options room this week is just a good example of, all right, let's tune out the indexes to some extent. Not going to ignore the indexes, but instead of trying to force the issue on the SPX, instead of trying to force the issue here on Amazon, is it's freaking 10% above the 21. Let me get back to the basics. Let me wake up, run my scans, just focus on some good squeezes. So, good example of a good squeeze here was Altria. And I'm going to show you guys a few more here this morning. Wake up, run those scans. These are the kinds of setups, if you're trying to look for longs, this is what your watch list should be made of. So on Monday, we're taking a position in Altria, and it hits a target yesterday morning. Okay. So nice and easy, pretty straightforward. I'm going to show you guys a few more, but that's a game plan I'm working. Until we can get the next good flush, and then we see where it goes from there. Just take me to the good setups. So energy, by far, compared to the semiconductors, compared to big tech, the industrials, compared to anything, best looking trend in the market. And you got the buy signals. So I still think any dip in these energy names, that's the dip you want to buy, at least for now. So EOG, put this on your watch list. I'd look for an entry back around 116, 115. And for me, it's always going to be the 21. So if old EOG here could dip one more time, we'll be taking a shot at the 21. We've already got a position in Devon. I would take more back at the 21. So there's EOG, there's Devon, there's MPC. I'd like to pick that up around 77, 78. There's natural gas, UNG, which there was the dip. So now the question is, where was I buying the dip? Nowhere to be found, but UNG looks solid. I mean, really, guys, any of them. EOG, Chevron. I think you could buy Fang on a dip. Quick look here at Chevron. So you're going to notice a theme. Right? These all have positively stacked EMAs. Amazon doesn't. The semiconductors don't. The Qs don't. The S&Ps don't. I'm looking for just good probabilities, good bullish trend. That's one of the first places I'm going to start. Do we have positively stacked EMAs or no? Right, so how about the industrial sector? No. How about the healthcare sector? No. Utilities? All right, you got it in utilities, and that kind of falls into the same camp as some of these energy plays. There's XLK. How about the transports? How about real estate? Energy is your only sector right now that has stacked EMAs, right? So there's my structure tool. And I don't just want to stack EMAs on my daily chart. I want it on my daily and my weekly. Makes my job pretty easy. The only thing that's got that combo is the energy sector. All right, what else am I looking for? Momentum. So I want positive histograms and I want green 10x bars, ideally weekly and daily charts. We have that in energy. We don't have that in the semis. So daily momentum picks up a little bit, weekly still bearish. We don't have that in big tech. Weekly still bearish. How about the S&Ps? Weekly chart is still bearish. So trend, structure, momentum, for now, all pass point towards energy. So keep an eye on those, y'all, and a few more for you here. One that we're watching closely for a trade around 106, 105 is CVS. You've got structure, daily, weekly stacked EMAs, get a positive histogram, nice bullish daily squeeze, and a great trend. Really well behaved during all the volatility here. So CVS, I think, is a buy on a dip. Another name here is Alcoa. And this is why you got to run those scans, because when it's at the 21, and it's at the 21 with a buy signal, that's when you pull the trigger. And you probably take profits on Monday. So we're looking for a pullback buy on Alcoa. I just showed you MO. We would love to jump right back in. So this comes back in towards the 21. I think Altria is very nice, very nice. And then you got LMT, Lockheed Martin. Stack DMAs weekly and daily. Bullish momentum weekly and daily at the 21. And you got buy signals. So I like LMT. I like CVS. I would like Alcoa on a dip. I'd like Altria on a dip. And I think the Caterpillars and the John Deeres of the world, it doesn't get much more extended than that. But I'd also like to buy the dip. So you got some energy names. You got a few names outside of energy. That's going to be my focus, guys, to the upside until we get the next good flush in the market. Then I'm going to take it from there. All the while with that bigger picture thinking, hey, if we get back under the weekly 21, door is wide open for some of this action. Trap the shorts, crush them. Trap the bulls, crush them. Trap the shorts, crush them. Trap the bulls. Back under the weekly 21, easily. I think we can go right back down towards the lows. So a few things to focus on there, y'all. A couple more charts here in terms of VIX. So as the S&Ps, Amazon, Tesla are stretched to the upside, you've got VIX here with like 2 to 3 closes under minus 1 ATR to the downside. So now your equities are stretched to the upside and your volatility is stretched to the downside. Not saying it's going to happen, but typically this is a setup here to now you crush the bulls. So in terms of volatility at the upper end at these crazy extremes, you're trapping shorts, right? And the shorts are squealing all the way down. But at some point here, folks are getting nice and complacent, right? Folks start having flashbacks to 2020, 2021. It's like, shit, we got to buy every dip out there. Well, maybe, but maybe not. So VIX is big here. And to me, VIX would be, if I'm holding a bunch of calls that expire in a few weeks, VIX would be a bit of a red flag. It's a little bit cooked to the downside. So a few things for you good people there, but we're going to keep it simple, back to the basics. And as I continue, or we continue, I should say, to work on these buy signals and these sell signals, the real goal here is just more frequent opportunities. So we're making tweaks and making improvements, but for those of you in the options room or the mastery, as we keep tweaking here, we should have more trades to swing at. And then for those of you here on the YouTubes, more ideas for us to discuss. But guys, I think we got like 5 minutes left here. Then I got to clear the way for the day trade room. But a few things to focus on. Weekly 21 is a pivotal level. You close above that, it's a really good step in the right direction in terms of trying to shift bigger picture structure. If we lose it, the door is just very much wide open for another big flush down. So as we're waiting for clarity here, I don't think you need clarity and energy. It's all pretty straightforward. So those are the kinds of things I think we can work with. Taking everything else a little bit more day by day. Right? So what I mean is, hey, if Tesla pulls in here, right, because this is a big shift. I'm not buying it up here, but it's a big shift. You're back through the daily moving averages. You're back through the weekly moving averages. I'm not buying it here. But you get your next dip. You find support right above all that mess down here. I might try to buy that dip. Now, if Tesla fails and you're back under the weekly 21, I think you're back to the downside. But before we can make those decisions, got to get a little cool off here, guys. So if you have any charts you want to cover, if you have any questions, any comments, complaints, throw them at me. But we got to wrap it up here, guys, in about 5 minutes. But definitely check out the YouTube stream here. You might have Chandler in the day trade room today. You might have Chandler in there. All right, good question here and a tough question. What about selling calls on Tesla? I totally get where you're coming from because of how extended it is. The only thing I would say is just position size appropriately, because Tesla's a little bit stretched at 900. And you get 920, then 950, then 1,000. This thing can be a total nut job. So yes, it's extended, and if you can get a few sell signals, if you can get shifts of momentum on lower time frames, you might be able to time pretty good dip here. But I'd want to do it kind of accepting the max risk, just in case Tesla can't, put the pipe down. And this is at 1050, 1100. It can be a little bit nutty. So if you're going to go for the short side, which again, I think you're waiting for a 15-minute squeeze to fire short. You're waiting for sell signals, some kind of confirmation that momentum is dying out. But right now, I mean, there's green 10x bars on almost every time frame. So maybe the 5 minute starts to flip bearish, and the 15 and the 30. You're looking for something to work with. But at the end of the day, because it is Tesla, position size appropriately. T-Pop, is it time to short Starbucks? Well, keep in mind, the short side right now, a lot of it is going to come down to the market. So say the S&P's rally to 4,600. At least in the short term, the short side probably gets a little bit tough. Now, if your S&Ps come in for 3 to 4 days here, the short side gets pretty easy. So Starbucks, I think, is a great example of the kind of thing you would want to short. Negatively stacked DMAs. So if the structure is bearish, momentum is bearish, now you're printing a brand new daily squeeze under the 21, and you got the sell signals. So I would imagine if the market rolls from here, you're going to get another big flush in Starbucks. The other thing to consider, though, right, and this is the importance of getting the flush in the market. You need the market going lower. As bearish as it might look, at the moment we're trading at $88, and your weekly 21 is all the way up there at 100. So it's in a bearish downtrend, right? No doubt about that. But you're trading about 14% under the weekly 21. Pull up the weekly chart here. So the reason I bring this up is because there's a lot of room here for this to reset and still be in a bearish trend. This, guys, is really similar right now to what we're seeing in the indexes. Looks very bearish down there. You might have a few signals. Just understand you're a long way from that 21. So that's why I think on the short side of Starbucks, you would need the confirmation that the indexes are going to roll over. Because if the indexes just kind of hold up, or even worse, the indexes continue to rally, weekly chart, you're pretty extended here. You're finding support at the weekly 21. A bounce and a rip to the weekly mean wouldn't change the trend. But if anything, it wouldn't be enjoyable to sit through. So that's the timing component for a lot of these shorts right now. With that being said, I would almost suggest instead short the indexes. You can short the Qs here. Your stop could be on a weekly close back above the weekly 21. So let's say you risk maybe a couple bucks here, $5-6+ Look at your reward. So if this fails here and we go make a new low, we're trading at 356. Your new low is around 310. A lot of potential reward. Not too much risk if you want to anchor to that weekly 21. If the Qs fall apart from here, if the SPX falls apart from here, then yeah, you can probably make money short in Starbucks. But that is one thing I take into consideration, the distance from the weekly 21. The market rolls over, everything rolls over. So my thinking would be, hey, work a pretty tight stop here. Taking an exit on a pretty big shift of structure, getting back above the weekly 21. I don't have to risk too much. And if I catch a new low, it's a lot of reward. So some food for thought there. Hope that makes sense. Hey, what's up, Terry? Good morning, man. Good morning. Dustin, PSX. We got like 3 or 4 minutes here, guys. PSX. Under the daily 21, we have the sell signals. You'll notice it's a bit more neutral. The EMAs aren't stacked positively, nor are they stacked negatively. The 10x bars aren't bullish or bearish. They're neutral. But in terms of structure, you are under the falling 21. You do have sell signals. I wouldn't get long for now. This gets through the weekly 21, holds it on the next dip. Then you got a pretty good shift there. For now, I'd be careful of getting long. Just based on the signal, this for now is a pop. I would only look to short. A little bit of cleanup left before I throw that into the bullish camp. Hey, Marcel, yes, we are live. We are live. Yeah, Anil, this just goes back to position sizing. Is Tesla due for a good dip? Absolutely. Amazon trading 10, that's a big push, guys. And it's not that we're just 10% above the 21. If you want to measure the move from the low, they're all due for a dip. But you could be getting in front of a train, right? This is just your market makers on a mission to squeeze as many shorts as possible. Technicals don't so much matter here, right? Average true range isn't so much matter here. It's a man on a mission to crush as many shorts as possible. I kind of like the idea of Amazon stalling out after a 6-day straight shot right into the 200, but I wouldn't take that as a huge trade. I'd keep it small, and if anything, maybe I structure a trade here where, hey, if Amazon comes in, I make a great profit. If it keeps rallying, maybe it's just a paper cut. So maybe some butterflies, a few different things you could do there. They're very much at the point where they should come in. Tricky market, though. Tricky market. And the last one here, guys, is Intel. When Intel kind of falls into the same basket, same basket is the market. So long as they're squeezing the shorts in the indexes, they're going to squeeze the shorts here. Go look at Uber. Go look at a Roku. Almost everything that's been beaten down is bouncing back up. It's because of your market. So for Intel here, market keeps pumping, this keeps pumping. As soon as you get that flush in the market, you look to get your flush here as well. Difficulty right now is that flush could be super short-lived. That flush in the market couldn't really happen at all. That's a possibility. We could keep on pumping here. So for anything you guys are trying to short, one level I suggest you anchor to is your weekly 8 EMA. Because we got a short right now in Intel. If it closes this week above the weekly 8, so if it closes above 48, we're probably going to close the trade. Now, if the market rolls over next week, this is probably going to roll over. But again, while we're looking for clarity, we got to focus on structure. For entry decisions, for exit decisions, knowing this market could rip higher or fall apart, based on the next tweet, based on the next piece of news. So kind of the theme of this morning, guys, is back to the basics. Stay in tune with your indexes, right? Stay in tune with the internals, the volatility, but then just make it about your setup. Before you take your setup, where's my entry? Where's my profit target? Where's my exit? And regardless of the craziness in the market, stick to those 3 things, or those 4 things rather. Your setup, your entry, and then your profit target and your exit level. But guys, I got to jump off here. Go check out the day trading stream. They should be firing up here, I think, in about a minute. So I got to cut you loose, guys, but I appreciate you spending a little bit of time with me here this morning. I hope you found the analysis and a few of the setups helpful, and I wish you all the best of luck here today. So happy hump day. Go on and get them, and I'll talk to y'all soon.